I don't know if you noticed, but on your placemat, there's a little card and there's a little gem next to it. When I woke up this morning, I thought it'd be kind of interesting to share with folks. You know, that one of the things we're trying to do is we're trying to find hidden gems among the unloved and unwanted investments of the world. And so each of you in that little box is my wife's birthstone, which is a garnet, in its rough stage. So literally, Dominic and I have the pleasure of turning over a lot of stones to try to find wonderful investments that are unloved and unwanted, and it has been an incredible journey. You know, in the year 2020, at the end of the year, Justin Stevens, my business partner, gave me a book called Traction. And in that book was, it described an operating system that helped for running your business. And we decided to adopt it. And what has transformed our business is through using the Entrepreneurial Operating System, or EOS, and it's been incredible. We started the business on April 1st of 2017. So we're an April Fool's business, and literally almost all our employees, we hire them on April 1st. Just keep with the tradition growing. But I set a goal on that first day to make the Inc. 5000. Now, I was very reluctant to share that with anyone because there's 32 million privately owned businesses in the United States, and my chances of getting put into a mental institution were very high, so I didn't share that with people. But unbeknownst to us, literally an incredible dream, we made the list last year. So this year, we moved up 500 places to 4,070, exactly 500 places. So I'm no fool. I realize none of this happens without the partnership and the trust that all of you have placed into us. It is such a blessing to the trust that you placed in us and allowed us to exercise our stewardship. And I'm quite disappointed in our industry because so many things that come out of the industry are so self-serving. And you know, just make a simple point is, you know, with crypto, you know, why are all these major corporations in crypto? Because they got folks out there who are willing to trade it, and they know they can make money, and it has nothing to do with acting in your best interest. Just my opinion. So thank you. Why don't we get on with the show? Our MC, Grace, is going to ask us a few questions to get things started, and then we'd like to open it up to the audience, and we're happy to answer any question. There are no ground rules other than let it roll, baby.
Hello, everyone. Thank you for joining us again, and thank you to Peter for that nice little speech. Just as a reminder, whenever you have questions, please raise your hand up high. Kellen in the back here, if you haven't met Kellen, he's in the back. He'll come around to you with a microphone. Just please ask your question into the microphone so everyone can hear, and so it makes it onto the recording for the event. If anyone would like to kick us off with a question of their own, feel free to get us started. Play the Jeopardy music. So everyone's feeling shy, so I'm actually going to get things started myself. So I'm going to start off with a little behind the scenes action. So earlier this year, we added Compass Minerals to our portfolio. It's a leading salt and other mineral producer. Can you walk us through what actually drew this company to your attention and kind of the research and background process that went into the company before we started the initial investment?
Would you like me to start?
You found it, so.
Well, we were familiar with Compass Minerals in reading through Morningstar reports in the middle of the like 2015 and 2016. And Morningstar had always rated this company extremely highly with stewardship. But it seemed very, very expensive, and so I could never justify owning this thing. So lo and behold, we never own it. And in March, I'm in Tropical Smoothie Cafe. And of course, I don't have the ability to not talk to people when I'm somewhere else. And so I start talking to an individual, and I tell him that we invest in the unloved and unwanted part of the world. And as I'm ready to leave, after having a conversation with the guy, I said, my favorite investment this year is 5 Point Holdings, FPH. And as I'm walking out the door, he says, my favorite investment this year is Compass Minerals, CMP. So I went back to the office and started investigating. This is a company that grew 22% compounded from 04 through 14. And then they did an incredible job of diversification that probably one of the best I've ever seen. The stock went from 95 to 7. So I put together a one-page recommendation sheet, and I said to Dominic, I said, I really like this investment. I think it's got terrific potential. But don't expect to read anything positive about the organization, because it's been horrific. And a few days later, Dominic comes back and says, Peter, I like it. Let's dig into it further. Now it's time for me to shut up and give you the rest of the story.
So Peter comes to me, looks crazy on the outside, stock's down from 95 to 7. Great business. The previous CEO had gone into a lithium business, a fire retardant business, and the beautiful cash flows that the salt business generated were being put towards this diversification effort that did not go as planned. So we were lucky enough, we have American Rock Salt is just 45 minutes away from us. We can kind of see what salt inventory they have on the ground. So one of our favorite things to do is if we can go get intel on competitors, we're going to go see what they're saying, what they're doing. So I took a drive down to American Rock Salt, saw what inventory levels they had, and then Justin's, one of his neighbors is in the salt business, call up a couple other people and just hear what's going on. And for those that were in Buffalo and Rochester, we had a relatively snowy winter this past January and February, and the consensus was nobody had salt, so salt inventories were basically gone. But the stock goes from 95 to 7, is basically saying, like, we don't care that nobody has salt. But if you understand economics and supply demand, when there's no supply, the bargaining power with a company is they can raise prices or go out and win business that they might otherwise not have been able to do. So we had several different conversations, and I think it was probably the best work Peter and I have ever done on a name. And so we ended up buying it, and we had a very good suspicion that the upcoming quarter when we bought it, that people were not prepared for what the results were going to be. They come out, report very good results, and that's kind of just the start of it. We went down to the mine up in Canada, went down 1,200 feet and got a tour of the salt mine. And what was really interesting was it was not just Peter and I that were there, it was a group of investors. And the group that was there had all bought it around the exact same time as we did. So somewhere between $7 and $12, this group of investors bought the stock. And so we were able to gain an additional perspective. You know, why did they like the stock? What risk do they see? And then we got to spend, 2 days with the management team. And the management team is basically all new within the last 2 years. You get a sense of what they're seeing, the opportunities. And when you can get down in a mine, get management basically off the record to talk about things that maybe they wouldn't say on an earnings call, but some plans and objectives they have, you get a greater appreciation of the opportunity that Compass has. And so we continue to like it and have, I'm going to say, no plans to do anything with it.
Let me add a little bit to that. So we make our initial purchase, And then the guy who I met at Tropical Smoothie Cafe calls me or sends me an email and says, by the way, I looked up your organization. You have a very interesting organization. And maybe we can talk sometime. It turns out that he runs a hedge fund. They own 15% of the business. And we have a call with him, and he goes through their entire scenario, their conversations with the management team, their board representation, and their investment thesis. So we did a second purchase of that after our conversation with him. So, you know, when you first own a business, you know something about the business and you believe it to be a good opportunity, but the learning doesn't stop there. It will continue and continue and continue. And either you become more intimate and comfortable with owning or adding to the position, or something else changes. Maybe the management team gives you a feeling of that you lose trust in them. And when you lose trust in them, it's exit stage left, baby. So I think we have enough about Compass. Let's move on to something else.
Between the two of you, oh, there's a question, Kellen.
This guy?
This guy. This is my dad. I paid him to ask this.
Thank you. So along the same lines, in minerals and such, commodities, seeing what's happened with gold over the last several months, going from 3,000 to 4,000 an ounce, roughly. I've been reading quite a few analysts that I respect looking hard at silver. And I just wondered if it's anything you're looking at, if it's something you'd consider, or if there's reasons you're not looking at, whether it's the silver miners or silver itself. Just your thoughts, because I'm looking for guidance. Thank you.
We'll let Dominic go first, because I don't even think silver or owning gold is an investment personally, because it doesn't generate any revenues. It doesn't have a cash flow. So that's my take on it, but Dominic, we'll let you weigh in.
That was like half of what I was going to say.
Next question.
It's an interesting business. I think with any commodity, you have to have some sort of perspective on where you think the price is going to go. Because if gold goes higher, obviously the gold miners are going to make more money, going to do well. If it goes lower, really doesn't matter what the business is going to do. The stock is going to go lower. I have a very tough time predicting the direction of any commodity, let alone gold, that is more of a store of value than it is a commodity that is used in the industrial world, oil, natural gas, copper. So with that said, I think then coming up with a valuation of what I think a gold miner is worth is very tough if I don't have an outlook on gold. So I'm just going to say we typically just throw that in the too hard pile and find something else that might be a little more interesting.
Thank you. So you mentioned your trip out to Compass Minerals earlier this year, and you had a very mine-heavy year, actually, between Warrior Met Coal. If any of you saw the piece of coal that Peter actually mined is out front, catch a glimpse of it. But you guys actually make it a point to go out and visit the companies that we invest in. Can you tell us a little bit about the trips that you've been on recently and kind of why it's prioritized here at OSA?
Sure. So last year I went out to 5 Point Holdings, land development company in California. One of the reasons, Peter, every day we would talk about 5 Point, he would say, Dom, you don't understand how vast this property is until you actually go out to see it. And you can imagine what 1,000 acres, 5,000 acres looks like, and you have absolutely no idea. So I think just when you're trying to understand the economics of a business, having a much clearer picture, going to the properties itself, gives you a better understanding of, hey, what's the potential value? While I'm out there, there's people walking around. I'm able to ask them, hey, like, what do you think of this community? Why do you live here? Different things. So I think you get an additional perspective when you're boots on the ground there at a location versus staring at a computer screen saying, yeah, they own 5,000 acres, they sell it for, $10 million, whatever the number is, and it should be worth X. But then you can go out there, gain more perspective. Hey, if somebody likes living there, odds are more people are going to live there, therefore the future price of acres are going to go up. Or if I have 5 conversations, hey, we hate it here, probably people aren't going to move. Land value is going to go down, home values will go down. So again, it just gives you an additional perspective on the business, makes it a little easier to analyze moving forward.
It's been a phenomenal year since we were last here. After we last met, I went to New York City, and Qualcomm had their investor day. In March, I was at the New York Stock Exchange where Corning did their presentation. We went down to Brentwood, Alabama for the Warrior Met Coal Mine tour. Dominic's been on several others. This whole thing with, it's much more than just the research. It's how I live my life. I just do what makes sense to me, and I don't give a hoot what the rest of the world does or why they think it should be done. If it doesn't make sense to me, I'm not going to do it. That's why I'm so frustrated with my industry is they're putting themselves first. As security salespeople, that's a lie, because our job is to act and put every one of our clients first. And when you start putting yourself first, you start doing really, really bad things. And but it only makes sense to us to go out and see the property. Five Point owns 16 million acres. It's absolutely staggering scenario. And of course, you have no clue until you actually see it. And you folks are handing over hard-earned money, and you want the people who are managing that to have some boots on the ground so that your money is well represented.
So 5 Point Holdings is in a group with a lot of other companies that we own that provides pretty significant exposure to the housing market. So whether it's lumber to the land development to the actual construction, can you just tell us both a bit about your thoughts on the industry and where it might be headed and what we're looking out for?
Sure. So the lumber industry, just dissecting, you got lumber is one of the main components that goes into home building. We also own like Tri-Point, which is a home builder itself. And then there's 5 Point that develops the land. So they level out the land, build the infrastructure to then sell the land to like a Tri-Point, Lennar, some other home builder. On the lumber side, lumber has gotten hit pretty hard as of late. A lot of, tariff news. And today we sit at a price that it is basically uneconomical for any Canadian lumber mill to produce a 2x4 or any other sheet of lumber. So that industry is very challenged right now, and it's typically stemming from home builders are working through their backlog of single-family homes. When interest rates are 3.5% or 4.5%, it's a significantly different environment than when interest rates are 6.5% or 7.5%. So the demand for lumber is lower. Tri-Point right now is continuing to work through their backlog, but if you look at what they're finishing versus what they're signing. Right now they're finishing, I think it's something like 17 homes a quarter, and they're only signing 1,200 new homes a quarter. So there's like a 500 home delta. And if you think about what that does, it just trickles through the rest of the supply chain. So 500 less homes means less lumber. It's going to pressure the price of lumber. And then 5 Point is an advantage in the sense of where it's located. It's all in California. They're basically the only land developer at this point in the cities that they operate in. So that's kind of an outlier on that sense. But if you look at anything else in the home industry, it's been pretty challenging for them. A lot of single-family companies are buying down rates. So instead of a 6.5% interest rate, they're buying them down to maybe a 5.5%, 4.5%, 3.5%, where the end buyer can now afford to qualify for a loan versus if they had a 6.5% interest rate loan, they would not be able to. I would say lower interest rates would be a significant tailwind to any of these businesses. And I think at some point people are going to start waking up and, I think a lot of people have delayed home purchases on the hopes that interest rates are going to be lower. At some point, I think people are just going to say, hey, I'm done waiting. If interest rates go lower in the future, we'll refinance, get the benefit then. But at some point, we're trying to start a family. An apartment's not the right place. So right now, it seems like there's some headwinds, but I think over the long run, America's underbuilt a couple million homes, and at some point, that's going to be a tailwind for all these companies.
Dominic and I were at a program called Manual of Ideas in New York City on Monday and Tuesday. I would highly suggest that if you're going to go to the Buffalo Bills game on Sunday night, like I did, that you don't have Dominic schedule your airline at 6 a.m. for Monday morning. So I don't do real great on 3 hours of sleep. So, but anyhow, one of the speakers there mentioned he was 45% in cash, I think he said. 20% of his portfolio was in home builders that he felt had tremendous upside area for them. So I'm with him as well. But in general, from a market standpoint right now, I'm very, very uncomfortable. There's just so many things out there that say excess to me. And I would, as I get my Wall Street Journal and I read through the initial columns in the morning, it's just like, red flag, red flag, red flag, red flag. And so given all those red flags, we've decided to take some money off the table and put some money aside. Now, we're not trying to time the market. We're just trying to make sure that we have adequate resources on the sideline, and should we have a significant drop-off in the markets, that we have an opportunity to buy some things that have become unloved and unwanted at great prices. So that's where we're coming from. But home builders is and land are two areas that we're very, very excited about and have significant positions in.
We're feeling shy tonight, aren't we? Oh, we got a question.
Thank you, Julie.
So I don't know the ticker symbol, but I know we have that Canadian lumber company in our portfolio. So how are we feeling about that? Is it on sale right now? Is it something that you think you're going to pursue more of? Are we just hanging out to see what happens? So I've been watching that one, and I know we were pretty beat up on it at the moment because of the statistics. So what are we thinking about that?
Yeah, so she's talking about Green First Forest Products, the ticker's ICLTF. Canadian, literally just listened to a podcast on the ride in. Canadian lumber mills, there is not a single Canadian lumber mill today that is making money. And when you think about that, in the future, sawmills are going to have to come online because you can't lose. It's something like $120 per 1,000 board feet that they're losing every time they produce basically like a sheet of lumber. Lower prices, one of the old sayings is low prices cure low prices, and what that's referring to is the longer low prices, in this case the price of lumber, stays, it just means there's going to be more and more pain. It's going to mean more and more supply is going to come offline, so more lumber mills are going to shut down. And when we eventually get to the other side, which there's been some pain in the Canadian lumber mill for a few years now, when we get to that other side, it's going to be even more profitable than it is today. And so Green First, they did a capital raise several months ago with a firm named Rabati and Company, where he was one of the speakers that Peter and I saw. We are very much in sync with their philosophy. So they provided $20 million to Green First. They're going to take that $20 million and use some of it to lower the cost of production by modernizing some of the machinery there. And again, when they get to the other side, it's going to mean instead of today it costs them $400 to produce lumber, it's going to cost them $350. So they're going to be more profitable in a year or so, and they have some additional cash to make sure they see that. One of the issues with Green First, love it. I talk to one of the board of directors every week, and the stock is just so illiquid that there's really no way to add any more to the position that we have without significantly moving the price. And if and when the investment starts to work out, the position size is enough where it's going to affect your portfolio. I don't have any plans of selling it. I think the management team, everything they've done, the hand they've been dealt has been relatively challenging with the market backdrop, but every step of the way, I think they've done a really good job. And so when the market turns, I think they'll be one of the lower cost lumber producers, and I think they'll be well positioned in a couple of years.
What has gone on that has given that company a little bit of a perk here lately? Could you tell us?
Sure. You know, I put some things along the side here of some of the businesses that we owned and such. And one of them is Bank of Ireland. You know, so sometimes people would ask us, you know, how do you actually find investments and things of that nature? And so, but in Bank of Ireland, you know, we read about it in a report, and this company purchased Bank of Ireland at about $6 a share. Now, at the time, it seemed like a really terrific investment because they had tangible book value about $10. So you're buying great value at a nice discount, okay? So it sounds incredibly attractive. Bank of Ireland was like many banks throughout the world that overextended themselves up to the financial crisis and got in major trouble and needed to be bailed out, in this case by the Republic of Ireland. And so Ireland had 5 banks at the time. And I decided to do some research on it, and it was really a wonderful scenario that a woman named Francisca McDougall came on in late 2017. And after she checked out the bank for a while, and it's about 6 months later, she did a report of what they were trying to accomplish, okay? And she was doing a terrific job of doing exactly what they said. They wanted to have half of the company's profits to be paid out in dividends. They wanted to increase their return on capital. Their non-performing loans had grown to like 15 or 16%, and they were doing a great job of bringing those numbers down. So it looks like it's a real good investment at that point in time. Boris Johnson gets elected in July of 2019. The stock goes down to 4 because the two economies are closely aligned, and apparently they weren't too thrilled about Boris. So we fast forward. In March of 2020, COVID hits. And by June, Bank of Ireland is now trading at under $2. It's trading at about $1.56 at the low. Well, I don't know about you, but I think that's unloved and unwanted. So we backed up the truck, and I wrote up the report at 188, but we got in at 212. The Republic of Ireland has sold off their position that they owned. They made several strategic acquisitions. In the country of Ireland, there's no longer 5 major banks. There's now down to 3. Bank of Ireland is the prime one there. They acquired Davies investment firm, and they also bought out another firm's Irish assets who was leaving the country. That stock today is trading at about 16, and it's actually one of my proudest investments that I've ever made. So that's why I'm wearing that shirt today. The the company announced earlier this year they're going to pay about a 60-cent dividend, which is music to my ears because that's like a 30% return on our original investment for the rest of my life. Sweet. So that's the kind of thing we'd like to find, and I think we may have found that again in Compass Minerals. I did ask Grace earlier that I said, "Look, we're human beings. We make mistakes. And I think it's important that we talk about some of our mistakes. So I'm going to talk about one of them. The Cy Sims Corporation went bankrupt. And part of that came along with the most beautiful piece of real estate in the Battery of New York City. So we decided to knock down the warehouse that was there, and we were going to build a beautiful 20-story building, which you can see pictures on over here, some with my kids and some are part of the presentation. So we went out and borrowed $200 million to build this condominium complex, and it's moving along quite nicely. And we finish it up, and it's time to start selling these beautiful condominiums. Something called COVID hit. And not only did everyone move out of New York City, but no one was buying condominiums. And you know something really weird? Those people that lent us the $200 million, they wanted interest and they wanted to be paid back on their loans. And when we were unable to do that, they said, no problem, just give us the building and get rid of all the shareholders, of which we are one of. And so something that looks like I would have thought we would make money hand over fist on this sucker. And a matter of fact, if the same opportunity came along again, I'm on board. But we got hit by a black swan, and but also that black swan also is what created the opportunity with Bank of Ireland. So that's just the nature of the beast.
We've got a question over here.
Could you talk a little bit about government bailouts and taking positions in publicly traded companies, and what are your thoughts on what's going on there right now?
So he's talking, one of the companies, Intel Corporation, got, I believe, an investment from the government. MP Materials, another materials company, got an investment by the government. I think right now there are some companies that I look at that are priced as if there is an expectation that the government is going to invest at them. And I'm 30 years old. I've obviously never seen anything like this. One of the things we've looked at in the past, Bank of Ireland, he just talked about, the Irish government owned a stake, 80%, 70%?
15.
15.
But they had to pay
Close.
back they had to pay back the loan too.
Gotcha. I think moving forward, and one of the things I've learned over time is when there is a very large owner in the company that you know at some point is going to have to sell, I can't imagine the U.S. government is going to own a stake in Intel for the next 100 years and that they'll never sell it. We've owned Fannie Mae, and feels like that's what they're trying to do with that, but I think that's probably going to come to an end. MP Materials, Intel, I think it's a very strange time, and while it's for the purpose of national security, they call it, I don't think you'll ever see us buy a position because we either think the government is going to take a position or because the government took a position in the company and now we think it's interesting. I don't really know what the precedent is for this, but I find it very strange.
Anything you want to add?
Well, he did talk a little bit about Donald Trump, our president, and so I thought make a little bit of a comment there. When I was at the New York Stock Exchange, and Wendell Weeks, the president of Corning, was asked, "What do you think of Trump?" And he said, Well, let's talk about his agenda. He said he wants to strengthen the borders. I'm behind that. He wants a strong domestic economy. I'm behind that. We want to eliminate waste in government. We're all behind that, okay? And we want to have we want to have fair trading agreements. We're all in favor of that. But the approach that he's taken, oh my God. I don't think anyone can figure out the approach that he's taken. It's just bizarre at best.
We have a question.
So I have a question about tariffs. My understanding it there is a place. I mean, now prices are high. In time, this may be the thing that turns our economy behind, but I'd like your take on tariffs, short term, long term.
I'm not sure I got a good answer for you. You know, I research companies that I think are inexpensive and trying to understand how the all the complexities of the economy work and things of that nature. I'm left in the dust. I don't really have a good answer, but tariffs have been around for hundreds of years. In an ideal world, there's no tariffs. And as a conservative thinker, I would prefer that happens. I guess I better just leave it at that because I would maybe I'll just plead ignorance, okay? I'm not a very good BSer, and so I don't try to.
He also left his crystal ball at home, so
No,
he doesn't
I
have
didn't.
it.
It's here.
Oh, it's here. Another position that has been intertwined with our government, Fannie Mae, which is always comes up at this event. We've held the common and the preferred stock for quite some time. Can you just tell us about what you're thinking with this investment and where you're thinking it's headed?
We'll let Dominic go first on this one. But there's over my career, there's two questions that every time I would have a meeting with people are, what's wrong with Corning? That went on for years and years and years. I know no one's asking me that question anymore. And what was wrong with Fannie Mae? And no one's asking me that question anymore. So, but if at the last investor forum, I said, I don't know when Fannie Mae is going to be resolved, but ultimately the government is going to have to deal with me.
The securities are the preferreds that we own. They have a par value of 25. If and when Fannie Mae returns to the public shareholders, they are going to have to pay off the preferred shareholders at par. It's a binding legal document that they have to do this. So I think that preferred Fannie Mae ads trades somewhere around 1650. So potentially still have 850 left to go. The commons are the more speculative vehicle that offers significantly more upside depending on how the government chooses to basically refinance the preferreds, how they choose to go to market with the equity issuance. I don't want to foreshadow anything, but it's possible in the future you see some changes to your portfolio as we continue with potentially raising cash, if that gives any insight.
Yeah, both Corning and Fannie Mae have become momentum stocks. As a deep discount value investor, it's not my territory, but it certainly is nice to be part of that and to see things taken off like a rocket ship. But no, we're going to take some money off the table because, Corning's trading at 81 times profits. we've owned the thing for a long time, and Corning in the year 2000 was a $113 stock. 2 years later, it was a $1.50 stock. I am not interested in my teammates having conversations explaining to you why their $3 million portfolio is now at $2 million. So I'm happy to take some money off the table and put some money aside for future distributions, and just to be cautious. And all I'm doing is doing what makes sense to me based on the gifts that God has given me to analyze companies.
We've talked quite a bit about taking some cash off the table and kind of building up this position in cash in all of your portfolios. Justin and I talk with you guys every time we meet with you. That's the topic. Peter, you've shed some light on that as well. If we fast forward, though, 12 months from now and we see stocks are still climbing higher, there's been no real decline or downturn opportunity for us to kind of redeploy this cash. Is the plan just to kind of invest in what we are still holding at that point, or do we just stay patient, stay the course?
Sure. If the market continues to rip and Pete's already nervous, please talk him off the ledge. So yeah, we've been raising cash in portfolios. Again, Pete said we're not market timers. We don't think the stock market is going to drop 20% tomorrow or anything like that. Just the number of ideas that we are coming across on a daily basis is just less and less every day. And any headline you read, there seems like there's some speculation going on. So we just want to be prepared. If the market continues to go up, it's not like the portfolios are going to 80% cash, where every day the market goes up, you guys are falling further and further behind. If the market still goes up, you guys are going to participate, not entirely, but still in a significant way. And we think our securities are more undervalued than the overall markets. Therefore, we think the upside is higher than what the market is going to deliver. So our goal is still to, perform well. And we're still looking for ideas every day. It's not like, hey, we're raising cash, let's go hunker down and come out, when the market's down. We're still searching every day, trying to find an investment. And our recent purchase of Topgolf Callaway, plans are to potentially gross the position up in a few months. So we are going to deploy cash opportunistically as opportunities arise. But again, not trying to market time anything. And if the market goes up, we're going to stay the course. I think that's one of the key pillars of our investment strategy. We're not going to waver, just because the market continues to go up. We're not going to all of a sudden start becoming, growth investors or momentum investors, as Pete calls it. We're going to stay disciplined to our value investing strategy, and we're going to continue to find opportunities and invest where we can.
I've never focused on performance with clients. And the reason is I don't want to turn our clients into performance maniacs. If we put together with you a strong plan for reaching your goals, and we're disciplined about your behaviors and our behavioral coaches, you're going to do great, okay? But when I was preparing for the program, I thought, I wonder what the top performing stocks have been in the S&P 500 so far this year. And the list came out, and many of our stocks are not in the S&P 500, just so you know, because Bank of Ireland is not in there, Fannie Mae is not in there, and Fannie Mae Preferred's not in there. And I was shocked. We would have about 5 or 6 companies that we only own 30 companies, and 5 of them would be in the top 25 performers in the S&P 500. Fannie Mae, Corning, Alibaba, Bank of Ireland. It was, what's that? I don't know. But anyhow, it was Fannie Mae Preferred. So it was quite a surprise. And of course, I read that, while I may not be doing the financial reviews, I read the notes for Justin's financial reviews, and and apparently he's been talking about the 1-year and 3-year performance. they're staggering. So to say I'm going to take some money off the table is not market timing. I think it's being a prudent steward of your money.
Kind of on the flip side of this question, the first question, if markets were to take a downturn by 20, 30% in the next week, what would be your guess as to why that was happening?
You want me to go?
Go ahead.
I don't know if you've heard of this thing called artificial intelligence. It's been in the news every now and then. My Q3 investor letter kind of details what I think the risks out there are. And if you see in the headlines, you've got Meta, Google, Oracle, all these monster companies spending, I think next year they're expected to spend about $600 billion on artificial intelligence data center build-outs. That is an extremely high number, and I think we're getting to the point where you spend $600 billion next year. What's the next? What's 2027? Is it $700 billion, $800 billion? It is a significant tailwind right now to the U.S. economy, and the issue is these guys do not. There's no way they have an idea of what the return on this investment is. And so if it turns out that this $600 billion that they're spending next year is only going to generate 10, 20, $30 billion of revenue, well, it's very tough to keep that type of spending up. And then on the flip side, basically the whole goal of artificial intelligence is to improve the efficiency of any corporation, business, individual, and that typically would result in lower hiring, maybe some people getting let go from their jobs. We have not really seen that, but the hiring that's been occurring is at a much slower clip. And if you're a consumer and you can see artificial intelligence in the news every day, you understand the impact that it might have on your career. Maybe that cruise or vacation you're expecting to go on next year, maybe you're like, I don't know if I'm going to have a job next year because maybe artificial intelligence is going to take my job. And so you would see consumers pull back. And if consumers pull back, which is the lifeblood of the economy, then that kind of gets into a spiral of how the markets and the economy would start to slow down.
Where do you want me to start? Oh my goodness. Every time I read the Wall Street Journal, a red flag goes up. Private equity, better known as the leveraged buyout industry. God help it if they get in your 401ks. God help it. God help us as a nation. I'm not a big fan of leverage, and I think it should be used very cautiously. But there's an example. Dominic mentioned artificial intelligence and things of that nature. Every day I'm picking up the Wall Street Journal, and NVIDIA makes an investment in Intel. Then they have an agreement with OpenAI, and then it comes out Alibaba has some chips that are going to compete with NVIDIA, and then here's the creme de la creme. AMD, who's had their behind handed to them over and over again by NVIDIA in the gaming business, announces, of all things, OpenAI they're going to buy some ungodly amount of chips from them. And I'm like, and the stock jumps up 25%. And let's put it in dollar terms. That's billions and billions, maybe 25 or $30 billion up one day. Well, wait a minute. What is it that makes NVIDIA unique? It's their CUDA software that AMD chips don't run on. So the valuations are near all-time highs on many securities, and especially in the technology area. Cryptocurrencies is another area. The speculation is out there, and it's rampant, and scares the bejeebers out of me. And as I said, I don't want to have the conversation with someone that says you're explaining or Grace and Justin and to explain why your $7 million portfolio is now at 4. I would rather have said we were trying to be prudent stewards and we took some money off the table. There's always going to be things that are unloved and unwanted. Okay? And guess what? No one else is fishing in those waters. It's a lonely place. It really is. But suddenly, everybody's with me with Corning. Everybody's with me now with Fannie Mae. So there's a whole bunch of folks that are behind me pushing those stocks up. And my thought is, we're more than happy to give you some of them.
All right, we're going to wrap things up with a lightning fire question round. So no dilly-dallying. We're just whatever's top of mind, give us the answer. All right, Peter, what is one company that you wish were public that is not?
I think he better go first because I don't have
Dom?
an answer.
Wegmans.
No answer.
Who do you think the big AI winners are going to be? Not necessarily a specific stock, but company, industry. What do you think? Peter? Dom?
I'll start. Again, I'll refer you to the Q3 letter. One of the positions we sold this quarter was Donnelly Financial. The reason we sold it, I would not have been able to do the analysis that I did without ChatGPT and other coding software. I'm going to say financial services, and I think we are going to be one of the winners. But I think long-term, any industrials company being able to automate a lot of their workflow is another winner.
I think Corning's going to be a big winner in that area, although the stock price is very high. So we had years and years and years in which to accumulate the position we have. And Sites is up in heaven pushing it for us. I know it, because I don't think I've had conversations any more than I did with her husband, Don Sites, on Corning. So Corning is going to benefit quite a bit as the need for fiber optics is there. But in terms of, from a valuation standpoint, I think Alibaba is going to be a major beneficiary. And we purchased that about 1.5 years ago when it was unloved and unwanted. And it's nothing less than phenomenal what's happened. But that's one of the shocking things to me is that typically when I buy something, I'm looking out 5 years. What's happened with Compass Minerals in 6 months and what's happened with Alibaba in 1.5 years knocks my socks off.
Last question. You both love a good research trip. So if you could go on one research trip anywhere in the world, company we own, company we don't own, where would you be headed out to tomorrow?
I'd be going to 5 Point Holdings.
I'm going to go to TSMC's, Taiwan Semiconductor, their manufacturing facility. It's one of the greatest companies in the world, and the AI revolution that we're seeing isn't anything short of because of them.
So this event, as far as I'm concerned, in my life, is my Super Bowl. And I'm really, really happy to have been here with all of you tonight. But the really, really cool thing about this event tonight was my big brother's here. And I may be 69 years old, but I'm always going to be a little brother. And his influence on my life is enormous. You know, when you're the oldest of 9, you carry an awful responsibility, a big responsibility. And he's knocked the cover off the ball with the influence he's given to the rest of the 8 of us. But one of the things I thought I would also say is, a number of years ago, I was visiting him at his home in Bowling Green, Kentucky, and Dennis said to me, "Peter, you've been talking about starting your own business for years and years. When are you going to stop talking and start doing it?" Well, that kick in the behind was well-deserved and motivated me to move in the direction that I have. So thank you, Dennis. We love you, and you are best big brother someone could have.
Thank you all for coming out tonight. It means a lot that you come out. What's going that you come out and spend this night with us every year for the past 3 years now. So it means a lot. It's been a joy to not only be surrounded by this excellent team of people who are all incredibly impressive, talented, and dedicated, but to also be surrounded by this fantastic group of people, to see the relationships that Peter and Justin have built over the past years, if not decades, for many of you in this room. It's a very impressive thing to see, and it's a great thing to be a part of. So thank you all for coming out tonight.
I just want to say one last thing. There's 2 individuals that on the O'Keefe Stevens team that I'd like to call out. Those cookies over there are not store-bought. Deanna, our new operations associate, is the one who baked all those cookies, and I can't imagine the work that went into that. And then second, Carly Flanagan, who I'm sure all of you know, is the one who basically organized, I believe, all this entire thing. And I can tell you, for Pete and I to just show up, know everything's going to be perfect, great job, Carly. Thank you so much.
The one other thing too is Kellen Peer, our new associate, is also back here. When we started this business 8 years ago, we never could believe what it's turned into, and we've been so blessed to have just wonderful people and wonderful relationships. So thanks again.